Secretary of the branch, CA Prashant Kumar. Third speaker of today's session, CA V.Kasi Visweswara. Senior members of the profession, respected past chairman, members of the managing committee, my dear professional colleagues, a very good evening to you all and welcome you all to this fourth day of direct taxes SHASHTOTSAV, a week-long webinars on direct taxes. And today's webinar on the topic, recent amendments and issues in the tax audit assessment year 21-22. We, the members of Visakhapatnam branch, convey our heartfelt thanks to the speaker of today's session, CA V.Kasi Visweswara, for accepting our request to address the members of Visakhapatnam branch. There are various kinds of audits being conducted under different laws, such as company audit, statutory audit, conducted under company law provisions, cost audit, stock audit, etc. Similarly, income tax law also mandates an audit called tax audit. As the name itself suggests, tax audit is an examination or review of accounts of any business or profession carried out by the taxpayers from an income tax point of view. It makes the process of income computation for filing of return of income easier. The objectives of tax audit include ensure proper maintenance and correctness of books of accounts and certification of the same by a tax auditor, reporting observations, discrepancies noted by a tax auditor after a methodical examination of the books of account, to report prescribed information such as tax, depreciation, compliance of various provisions under income tax law, etc. All these enable the tax authorities in verifying the correctness of income tax returns filed by the taxpayer. Calculation and verification of total income, claim for deductions, etc. also becomes easier. A taxpayer is required to have a tax audit carried out if the sales, turnover, or gross receipts of business exceeds 1 crore in the financial year. The threshold limit of 1 crore, the tax audit is increased to 5 crore with effect from assessment year 2021. If the taxpayer's cash receipts are limited to 5% of the gross receipts of turnover, and if the taxpayer's cash payments are limited to 5% of the aggregate payments. If a person is required to get his accounts audited under any other law, for example, statutory audit of companies under company law provisions, the taxpayer need not get his accounts audited again for income tax purpose. It is sufficient if the accounts are audited under such other law before the due date of filing of the return. The taxpayer can furnish this prescribed audit report under income tax law also. The tax audit report consists of 3 different forms, 3CA, 3CB, 3CD, which will be issued by the tax auditor as per the applicable to different SSCs. If any taxpayer who is required to get the tax audit done but fails to do so, the penalty will be 0.5% of the total sales, turnover, or gross receipts, or 1,50,000, whichever is lower. However, if there is any reasonable cause for such failure, no penalty shall be levied under section 271B. To discuss and explain about the various points and clauses in the tax audit report or forms, as well as the recent changes in the tax audit report, we have excellent speaker with us today, CA V.Kasi Visweswara. Let us gain thorough knowledge with his deliberations on the topic. Now I request CA Ritu Agarwal to introduce the speaker of today's webinar.
Good evening all. CA V.Kasi Visweswara is a bachelorate in commerce from Bulaya College, Andhra University, and has become a fellow chartered accountant in the year 1997. He is specialized in direct taxes with a long-standing experience of 28 years. He is one of the chartered accountant who is able to successfully guide some of the highest taxpayer awardees in the city. Apart from direct taxes, he also has expertise knowledge in the fields of audit of nationalized commercial banks and MSME sectors. He has also designed and structured accounting policies to various business entities. Also, he has competent knowledge in the field of international taxation, investment planning, and repatriation of funds to foreign currencies. He has spoken in many seminars on varied topics in the field of direct taxes. He is socially active in the works of charity, spirituality, and education to the needy. He is a member of various charitable and religious organizations like Vishaka Music and Dance Academy, Chandrasekharendra Veda Vidya Parishad, and Dravida Welfare Association. He also likes to help as an arbitrator for resolving family disputes among any SSC community. Apart from social life, his personal interests include playing chess and cricket. With these few words, I would like to introduce CA V.Kasi Visweswara Rao to this webinar.
Thank you, CA Ritu Agarwal. Now I request the speaker of today's webinar, CA Kasi Visweswara, to take up the proceedings.
Thank you. Thank you, Murali Krishna Garu. You have given me again a chance to review all the provisions of the Income Tax Act. And I seek blessing from all the senior members. I've seen name like V.S. Murthy. Though he is my brother, he is an elder, and in all corners of the life, he is elder to me. More in knowledge and other things. Ramakrishna Garu and other senior members are there. Very thanks to one and all. I try to present this particular class, section 44AB, which is nothing but an audit under tax audit. Here, this particular section, section 44AB, is introduced in the year 1985, with effect from 1/4/1985, Finance Act 2004, where at the time I was an article student. Then, from that onwards, I have a lot of affinity with this to this particular section, because which is my main brother. I have been studying this particular section, rules, forms, since the birth of the particular provision. After all, what is the tax audit? It is the main objective of this tax audit is to ensure the SSC that he has prepared books of accounts properly, and then assessed the tax liability properly. That is the job of an SSC. And the job of a chartered accountant is to ensure whether the books of accounts maintained by him are proper, whether he claimed properly deductions and exemptions and other things, and give his comments on that. This being a 37-year-old provision, I have all the 37 years association with this section. So initially I would like to go through all the 37 years journey, though not required for the argument, but I would like to present my journey with this section. This section suffered many amendments in the name of simplification. The Finance Act 1984 has inserted this particular 44AD and 44AE, and 1997 section 44AF in the name of, again, simplification, presumptive taxation, where the income taxpayer is estimated, where the income of a taxpayer is estimated at a specified rate and no need to maintain books of accounts. So, which is quite contrary to section 44AB. The SSC is required to maintain books of accounts. In 44AD and 44AE, he need not maintain books of accounts. Next, the presumptive taxation. To popularize this presumptive taxation, many benefits were given, many taxpayers. That is, they need not maintain books of accounts. They need not maintain books of accounts. They need not pay advance tax. There is no scrutiny by the department, and allowing interest and remuneration to partners of a firm. These are all various advantages given to that particular provisions. And further, it extended to professionals also, 44ADA. And again, in addition to this, the option is given to SSCs to declare the profits at less than the specified rate what is stated in 44 AD, 44 AE by getting the books of accounts audited by chartered accountant. In one set, they are asking us to maintain books of accounts, and if the SSC wants, again he is supposed to maintain books of accounts. If he opts for 44 AB presumptive taxation, he would not have maintained the books of accounts. So lot of confusion is there. Subsequently, after popularizing, or people are settled with the provisions, they slowly reduced the benefits given to the taxpayers. That is, taxpayer opting for presumptive taxation has to pay advance tax, withdrawal of a deduction of remuneration and interest paid to capital to the partners of a partnership firm, and increasing the rate of estimation from 5% to 8% of the turnover. These are all the withdrawal part of it. Again, in order to promote the digital payments, to discourage cash receipts and payments, the rate of estimation of income has been reduced to from 8 to 6%. If it is, they are digital payments and all. Further restrictions are there. The SSC opts for presumptive taxation once he deviates within 5 years from the date of this presumptive taxation. He is not eligible to carry out presumptive taxation for further 5 years from the year of deviation.
Sir, sorry to interrupt you, sir.
Sir.
మీరు PPT షేర్ చేస్తున్నారండి?
చేస్తున్నానండి. This is only an introduction part of it.
Okay, okay.
So, because I have an association with this section for last 37
yeah.
years.
Okay. No.
I am going through the history of it.
ఇక్కడ విజువల్ గా లేదు, అందుకని జస్ట్ ఓకే.
నేను కనబడుతున్నానా లేదో కూడా నాకు తెలియడం లేదు.
లేదు మీరు కనబడుతున్నారు, మీ వాయిస్ క్లియర్ గా ఉంది, అంతా ఓకే. PPT షేరింగ్ రావట్లేదు. ఒకవేళ ఇఫ్ యు ఆర్ డూయింగ్ ఇట్,
ఇది ఓన్లీ an introduction. This is only an introduction.
Okay sir, please sir, proceed sir, please.
One second. So further, the restrictions were there. If the SSC opts for presumptive taxation, once he deviates the presumptive taxation to audit, then he is not eligible for presumptive taxation for further 5 years from the year of deviation. Again, introduction of penal provisions even to the chartered accountant could not report properly. So what I wanted to say, the role of a chartered accountant has become very critical because of interlink between the 44 AB, 44 AD, AE and other provisions of the presumptive taxation. Frequent amendments to this section and controversial judicial interpretations with regard to 43B over the due date of ESI, PF contributions and etc. and many more. Penal provisions even on chartered accountants who could not report properly, and peer review by the institute, no increase of fees by the clients, even though we are bound to do 2 years work in one particular year. Today's scenario is that the auditor needs to use all his skills and energies in selection of a case, whether to carry out tax audit work or allow the SSC to go for presumptive taxation. So this is, I have all the 37 years experience I'm telling. In this case, even the 40 turnover threshold limit, 40 lakhs, 60 lakhs, 1 crore, 5 crores, 10 crores, so many 2 crores, so many issues are there. Of course, we will discuss in the next slides. Now, I have decided to present my paper very simply. Even though there are so many amendments in this particular financial year 2021 and which are effective for assessment year 21-22, I have selected only those amendments which are required for the purposes of tax audit. And some I may miss out anything, no problem. And what is the impact of amendments of fixing a threshold limit? That is also an important issue. And some selective critical issues which I feel I wanted to discuss, and I will leave the rest of the portion to the floor participation. So this is how I decided. With this brief introduction, now I enter into the subject proper, amendments. Okay. Tax audit amendments, assessment year 21-22. The frequent changes that we happened in the tax audit reporting since its introduction in 1984 warrant a regular updating and detailed class by class analysis on the part of a chartered accountant. This is a mandatory. Now coming to the subject. First amendment. The due date for filing the return of income and tax audit report for tax audit cases. Hitherto, we used to submit both return and tax audit report simultaneously. Now, because of this particular amendment, 1 month before we need to file the tax audit report. So originally 139(1) is the due date for filing the return of income is 31st October, and filing the tax audit report is 30th September 2021. It is extended to, filing of return is extended to 30th November, and filing of TAR report is extended to 31st October. Thanks to Infosys, it may go further, they may extend also. We don't know. As of now, the dates are this. Next, the threshold limit of turnover. I have read 1 crore, 2 crores, 5 crores, 10 crores, which is the correct one. So we will study in the further slides. But with effect from 1/4/2011, 1 crore is the turnover for the purposes of tax audit under section 44AB. And other, we can say big audit or small audits for that purpose. The big audit, small audit means 1 crore where we are going for 44AB audit is called a big audit, or where 44AD people are opting for audit because they are showing less than the prescribed limits. In such case, it is only a small audit for that matter. And before going to this, I would like to share one important statistics. That is, non-corporate assessees. How many non-corporate assessees are there? This I have taken from the income tax portal only. This position is as on 31st March 2018. There were 2,48,68,212 assessees are there, non-corporate assessees. Whereas the corporate assessees are only 8,41,942. I doubt in this 4 crores, 2,48,68,212 assessees, how many people are covered by audit, either small or big audits, or filing directly, we do not know. That particulars I do not know. But why I am sharing this statistics is, this particular tax audit is meant only for non-corporates normally. Otherwise, where they are liable for other audits, we are giving only Form 360 particulars of facts, beyond that nothing else. But whereas this is most important for non-corporate assessees. This is the main aim. Originally, when it is introduced, non-corporate assessees, they are following different methods, different way of calculations, and all those things are there. To bring them onto a particular platform, this particular 44AB is introduced. Similarly, even our institute says there are Audit firms are less and individual practitioners are more. Both are on a similar line. So these statistics, keeping these statistics in our mind, the non-corporate assist tax audit is most important issue, according to me. Because it extends to so many SSEs. This is applicable to so many SSEs. Now, the threshold limit. With regard to threshold limit, from 1/4/2021, the Act says only 5 crores. In the budget, they revised it to 10 crores. The 10 crores threshold limit is with two conditions to be satisfied. Aggregate amounts of all receipts, including sales, in cash does not exceed 5%. Aggregate amount of all payments, including expenses in cash, does not exceed 5%. So, if you take turnover, that is a P&L item. If you take the reckoning of payments and receipts, it is another total payments and receipts account. Total, not only revenue items, but also capital items. Even purchase and sale of balance sheet items. Say, for example, purchase of immovable properties, and those things are also will be taken into consideration for the purposes of determining the threshold limit of 10 crores. And I will come to in the coming slides. There is a critical issue which we will discuss on a particular slide. The third amendment is most important, according to me, is reckoning of cash component. How to calculate the cash component? Previously, you said receipts and payments you take into consideration. But now, there is an important amendment made to section 44AB through second provision with effect from 1/4/2021. Any receipt or payment by check, draft, which is not an account payee, shall be deemed to be payment in receipt, payment or receipt in cash. What does it mean? Means, even if a bearer check or a crossed check, whatever it means, even bearer check and crossed check payments are also deemed to be the cash transactions. This is most important point. Okay, the issue is like this: how to verify this? As the institute has already given us a most important issue, this particular point at the time of payments and 269 SS and other issues, accepting of a loans and other things, we have got a safeguard of one particular sentence. In view of the particular evidence is not available with the SSC or so and so, we were unable to decide whether the payments made or the loans taken are in excess of rupees 20,000 or not by way of a cross check or not. That was our stand taken by the institute. Now, the issue is how to reckon, how to find out. But according to me, the latest Form 26 AS is there. That has also been amended. Through that, we can find out. I think this is one way. I do not know what happens to it. This is one way of looking at it. 26 AS, total cash transaction they are reflecting, wherein even the bearer check, I think I have seen bearer check only, not cross check. Bearer check transactions are also being shown as a cash transactions. This because when I verified the tally data of a particular SSC, we have seen the cash transactions and the cash balances. I could not find the total tally of the cash balances, whereas the 26 is saying so. Then my assistants, they are saying, sir, the cash payments declared in 26 AS and here are not tallying. I said, what is the problem? How to find out this? Then I came to know he's a contractor. He was drawing by only bearer checks. And he is also giving checks, only uncrossed checks only is giving, they are uncashing. Even bearer checks, I think now they are reckoning as a cash component. For crossed checks, I have a doubt. I don't know whether they are counting it as cash or not. But this is most important issue. Now, coming to revision of tax audit. There is an amendment in Rule 6G by notification number 28 by 2021 with effect from 1/4/2021. Audit report furnished under this rule. Audit report furnished under this rule may be revised. There is a, suppose the very important issue is today tax audit report used to be uploaded 1 month prior to the due date. So there you find 43 payments are still, there is a chance for the SSE, but not to the auditor. Auditor, if he wants to disclose, he has to disclose stating only that this particular checks were not, the payments are not made. Whereas SSE has 1 month time to pay that amount. So in that case, our reporting goes wrong. Therefore, they allowed the auditor to file a revised tax audit report. Okay, if that is the case, what is the time limit? It can be made on or before the end of the relevant assessment year. For the purposes 21-22, the date of revision of return is up to 31st December originally, but it is extended to 31st January 2022. Whereas, suppose if it is filed and immediately completed, is a big question. I always have the habit of questioning myself, and I do not know. We will discuss in the floor participation. Now, another amendment, clause 8A. Whether the SSE has opted for taxation under 115 BA, BAB, BAC, BAD. These are all nothing but the special taxation where reduced tax of rates are given an option to the SSE. But this was given in the earlier year. The tax auditor, the duty is to disclose. Tax auditor has to state yes or no to this class. Beyond that, nothing else. SSE has an option to choose. Here also there is an issue. SSE has an option to choose to go for reduced rate of taxation or not before due date. That is 31st October. Again, there is a problem. We are supposed to file our audit report 1 month before to that. So how to handle this situation? We will keep it for discussion. Now, class 17 in form 3CD. Class 17 of form 3CD, where any land or building are both transferred during the previous year for a consideration less than కొంచెం క్షమించాలి నాకు ఈ నడపడం అవి తెలియదు మా అమ్మాయి ఉంటే అవ్వదు ఎనీహౌ ఐఎమ్ unable to see my face. Yeah. Now, class 17 of form 3CD, where any land or building or both are transferred during the previous year for a consideration less than the value adopted or assessed by authority of a state government, 43 CA or 50 C. This amendment is Finance Act 2021 and effective is from 1/4/2021 only. So, what is this amendment? In order to boost the demand of a real estate sector and enable the estate developers to liquidate their unsold inventory at a lower rate, the home buyers and safe harbor threshold limits have been enhanced. In the act, it is there as 10%, now enhanced to 20%. This is also budget 2021, subject to the conditions. And 2 more conditions were there. What are those conditions? The builder should be in a position to transfer residential unit that takes place during the period. The period is also given. This is a small term amendment 12/11/2020, 36/2021. In this period, if the builders, because of the pandemic, they were unable to sell and a lot of problems were there, to boost the economy, the 50C and 43CA are two important issues for us. What is 50C and what is 43CA is, in case the sale consideration and the stamp duty value differs, whichever is higher, we are taking into consideration. Where the safe harbor threshold rules are there, it is originally 5%, 105%. If there is a variance, it can be acceptable. In the year 2020, originally it is extended to from 5% to 10%, but in the budget they revised to 20%. That means, where, say for example, 1 lakh is the sale consideration received and 1,20,000 is the stamp duty value. So 20% difference is there. It can be acceptable. But how to calculate this, we will discuss in the issue. Is it from the point of sale consideration or from the stamp duty? There is an issue. We will discuss in calculation part of it. And there is one more condition is, the builder first time he should allot the residential unit to any person. Third one is, the consideration should not exceed 2 crores. This is for promotion. These 3 conditions are there. Okay, the Act has imposed the 3 conditions, short-term arrangement. But the problem to the auditor is, how do we know it is a first-time allotment to the residential unit to any person? Any guess? I think maybe RERA data we can verify. RERA data every month allotment will be, I think they are filing some forms. In that we can find out. But otherwise, how to do it? It's a problem. Or else, better thing is to obtain an MRL. We take a management representation letter and then proceed with the answers. Here, our job is to say yes or no. That's it. We have nothing else. So, either RERA data or MRL data by SSC, or obtain a declaration from the SSC regarding the first time allotment of a residential unit to the buyer. Here, I told you the issue is 120%. How to calculate it, we will discuss later. Next amendment. Clause 18 in Form 3CD. It mentions depreciation allowable. New additions. In clause 18, there were new clauses were added to this particular one. New subclause is CA. Adjustment made to WDV under section 115 BAC and BAD. Adjustment made to WDV, intangible assets, including value of goodwill. Adjustment of WDV. What does it mean? Here also the obligation of an auditor is to say yes or no. If the SSC has opted for that simple taxation, in the case of an individual, so we know that they need not claim any of the expenditures like 10 and 13A, 14, 17, 32 and 10A, deductions like Form 16 standard deductions, property 24 loss. If you forego all these deductions, there is a simple calculation of tax straight away on the gross income, 5%, 10%, 15%, 20%, 25% like that. So if the SSC has opted for it, now we have a work. This is what I mean to say. We need to do 2 years work in a particular year. How it is, I will tell you. Next, if the SSC opted for special rate of tax, 115 BAC, though not claimed the above exemptions and deductions, the particular 4360, it says the SSC is deemed to have given full effect to. Thereby, we need to recalculate the WDVs, and other things. No further deduction for such a loss or depreciation shall be allowed for any subsequent year. Therefore, even though he has not claimed in the earlier year, we need to rework the WDVs and then take the correct WDV and proceed this year. Substitution of class 32A from form preceding. Digital details regarding brought forward losses. Similarly, where an SSC had a loss in the earlier years and due to special taxation regime, he opted for this 115 BAC, BA, BAD and all. Whatever losses up to were there were also deemed to have been given effect. For that reason, whatever losses that we are carry forwarding, this year we need to recheck the losses. Last year that would have been given. Say, last year suppose he had a 1 lakh income and he paid taxes on it. The loss, whatever brought forward, to that extent 1 lakh will be taken into account. Say 5 lakhs WDV loss is there. Some loss is there to him. On the 5 lakhs, this 1 lakh, whatever profit he declared, will be taken up and 4 lakhs should be taken into consideration. BF. Brought forward losses should be adjusted. The tax auditor has to check whether there is any loss brought forward or an absorbed depreciation relating to deductions. If yes, then determine and report. We need to recalculate and then report. This is the amendment. Next, omission of class 36 is very easy. You know, in view of dividend taxation, that is removal of dividend distribution tax and all, the reporting under this class has become redundant. Therefore, they have omitted. Deferment of reporting under class 30C and 44 of Form 3CD. This section, I think, has been introduced in the year 17, I think. From that particular year onwards, this has been continuously being deferred. Thank God this year also it is deferred. We need not discuss about it. We have already forgotten what is 30C and 44. For the interest of members, I would like to read what is 30C and 44. Class 30C. Whether the SSC has entered into an impermissible advance agreement, avoidance agreement, referred to in section 96. Form 30C, class 30C. Form 30, class 30C. Yes. Whether the SSC has entered into any impermissible avoidance agreement as referred to section 96 during the year, say yes or no. This particular clause has been deferred. Similarly, class 44 also deferred. What is class 44? Class 44 is breakup of total expenditure of GST. GST audit. Yes. Breakup of total expenditure of entities registered or not registered under GST. This particular clause is also deferred till 31st/3/2022. Of course, these are all only facts to be mentioned here, but anyhow, they deferred it. Thanks to them. Now coming back. Sorry. Sir, we are very poor in technical aspects. Therefore, it will take the assistance of my daughter. Now, 36 omitted. Yes. Class 20B, explanation 1 and 2 inserted by the Finance Act 2021 with effect from 1/4/2021. What is class 20B? Section 36(1)(5), explanation 1 and 2, any sum received by an SSE from his employees to which section 224(10) apply, if such sum is created by the SSE to the employee's account in the relevant fund account or funds on or before due date. This is what I was telling. There was big hue and cry on particular section 43B. Employees contribution, they do not want to allow. Employers contribution, yes, they can allow. All these things were there. Now that has come to a rest due to this amendment. Even Nirmala Sitharaman also said, only when the particular fund is deposited on or before respective due dates of the respective act, not Income Tax Act. Therefore, this particular controversial decisions, yes or no, all these things were there. Now I come to full stop. Coming to another clause 19 of Form 3CD, withdrawal with effect from 1/6/2020. This is a, nobody has seen this particular class so far. I never used it, but anyhow, for the purpose of amendment, I need to discuss. This is 35(1)(3). Some weighted deductions were given to the amounts admissible to the P&L account. Say if you allow 1,000 rupees, you make a payment, 1,500 will be deduction. This is 35(1)(2) and 3. That is nothing but a sum paid to the companies which has the main objective is scientific research. This was withdrawn with effect from 1/6/2020. There was a tussle between me and my student. She said, no, sir, this is withdrawn. But without knowing that, I do not know from 1/6/2020 whether it is withdrawn or not. But I said, no, it is there. But reinstated by Taxation and Other Laws Relaxation Amendment Act 1/4/2001. Again, they reinstituted it. This will not be there in the Act. It is only relaxations and all. Taxation and Relaxation Other Laws Amendment of Certain Provisions Act 2020. It is there. They have reinstated. Of course, of no big use for us. Next point is deduction of TDS by individuals and HUF. Thanks. This is a good provision, welcome provision. Till 31/3/2020, only SSEs whose accounts were subjected to tax audit under 44AB were required to deduct TDS. Hitherto, only organizations, firms, and companies, other people, they used to deduct tax at source. Individuals, they are exempted. But again, they were given a chance. No, if you are liable for audit under section 44AB, you are liable to deduct TDS. Now, this audit obligation and TDS obligation were segregated. Whether you have audit or not, you need to deduct tax at source. But the turnover limits were given. Business turnover exceeds 1 crore, any individual, whether he is liable for audit or not, he is liable to deduct tax at source. For professionals, if it exceeds 50 lakhs, they are liable for deduction of tax at source, individual and HUF. Now, another amendment. payment of certain amount in the case of section 194N. What is this 194N? Is withdrawal of cash. The banker and the financial institutions were given an obligation. If the SSE withdraws a particular amount, the bankers should deduct tax at source. If he is liable 20 lakhs to 1 crore, if up to 20 lakhs, nobody deducted tax. 20 to 1 crore, 2%. In excess of 1 crore, it is 2%. If that person is not filing returns of income, it is 5%. Of course, there is a Kolkata High Court decision and Kerala High Court decisions were there. They said when a particular payment is made, if that doesn't include the element of income, how can you deduct tax at source? Of course, so it was kept in abeyance. They said it was stayed by Kolkata High Court. Therefore, we need not bother about it. But what is our duty? If one particular court says, don't do this, what is the role of a chartered accountant? So at the time of reporting, I feel, according to me, based on the High Court decision, and this is not our job. Somebody else has to do that. Our job is to receive it. We are, unless we go and audit a banker, then only we need to say. Here, the SSEs are in recipient side. So therefore, we need not bother about this class. Whether it is in High Court or somewhere else, it's not an issue for us. But the impact is, there is tax reduction. So, and another clause is new categories of tax collection and source. 3 things they have added. That is, with effect from 1/10/2020 onwards, TCS and LRS scheme. What is LRS scheme? Liberalized remittance scheme for a sum in excess of ₹7 lakhs. If a person sends his son to a foreign education and sends more than 7 lakhs, then he is liable to pay tax. The banker will collect, in addition to the amount of to be remitted, 5% he will deduct and he will show it. If the same person, if it doesn't have any PAN or Aadhaar, then the rate of 5% has to increase to 10%. This is one category. The other category is TCS on selling overseas tour packages. What is this? Our Prime Minister was commenting, so many people visited USA and other things, but nobody has paid taxes. Probably that has made them to collect TCS. Now, for tour packages, there is no monetary limit. There, genuine people are there for education's sake. They have limited, the first given 7 lakhs threshold limit. Over and above 7 lakhs only, they deduct tax at source. In the case of a foreign education tour or for the purpose, normally it is LRS scheme is need not be for education, where a person genuinely transferring his own funds, like a person is inheriting his own properties. Nowadays, seen in Corona, so many problems were there, which we will discuss at the later part. Father is here, he died due to Corona, and the children are there, they were unable to come. And so many cases are there, how to take back this amount to them. When we say, yes, sir, you have to pay 5% tax, these people are much worried about it. Why should we pay tax? It is our own money, we were taking. No, sir, you have to pay and you will get it back. That is a separate issue. Now, another TCS concept is the seller of a goods whose turnover during the preceding financial year is 10 crores and receives 50 lakhs or more from a domestic buyer of the goods, TCS at the rate of 0.1%. In case if no PAN and Aadhaar, 1% including GST. According to me, who will be without PAN and Aadhaar? Maybe, I don't know, any other clients are there, it can be 1%. Otherwise, it is 0.1%. This is 3 kinds of people were added into TCS net. Now, one more amendment, tax to be charged on dividends received. With effect of 1/4/2020, the dividend income is taxable. If the dividend income exceeds 5,000 in a fiscal year, the entire dividend is subjected to TDS. It is 7.5%. Without uploading PAN or to an RTA, then it is 20%. Person is having PAN, but he has not given the PAN number to the other companies or the people who are deducting tax also. If he doesn't give the PAN number, the punishment is just 2.5 times. It is 20%. Now, the last point, 26A is widening in the scope of the form number 26A. With effect from 1/6/2021, form 26, the scope has been enlarged in line with the rule 114I. It includes information like sale and purchase of shares, sale and purchase of immobile properties, information relating to SFT, that is specified financial transaction, payment of taxes, tax demand and refund, information relating to pending proceedings with the IT department, information relating to completed proceedings with the IT department, information relating to arrangement under section 90, sorry, it is not 98, it is 90B. And the GST turnover is also linked. In addition to that, I have seen cash withdrawals are also being issued here. Thereby, it's a wonderful document for an auditor. It helps the auditor to see so many things. At so many other places, we need to discuss about the demand and refund of necessities we need to disclose. Those things, it will be a useful document for an auditor. And another amendment is there, which is important to us, of course, which I could not give in the slide. That is partnership firm. A partnership firm is there. When the partnership firm, with effect from 1/4/2021, the word working partner is replaced by partner. What does it mean? If the firm is liable for audit, all the partners are liable to, their due date is extended to due date with the firm. That is the one small alteration. This has been inserted in section 139(1), explanation 2, sub explanation AA. This is where this particular word is there. If we don't go through so depth, I think it is very difficult. But anyhow, this can be a 19th amendment. These are all the amendments which I felt which are important in connection with tax audit. Now, reporting, issues in reporting. And one of the major issue which I have been telling you, the critical issue is determination of turnover. So this I could try to do with this table. Of course, this has been taken from elsewhere. Everything, today you click a button, you get so much of information. So from one of the presentations, I could take this. If the turnover is 1 crore, whether he is an eligible SSC, eligible business, if it is yes, and the percentage of receipts and payments not applicable for him, and if the profit is more than 8%, rate of income is 8% of that on the turnover, no audit is required, no audit report needs to be filed. And there is 1 crore clause, another clause is there, clause B. Eligible SSC, eligible business. Cash receipts is not applicable to, cash receipts and payments not applicable to them. And the profits are less than 6% or 8%. 8% is for others and 6% is for digital transactions. If in that case, the audit is required. What is the section? Section 44AD. Now, 1 to 2 crores, this is causing a lot of problems. According to me, I felt, this is what in the introduction I said, today, selection of a case to audit or not is the biggest problem than auditing itself. It is better to audit without asking for arguing for all these things. Now, 1 to 2 crores. In this case, if he is an eligible SSC and eligible, for all the purposes, we can take eligible SSC and eligible business. That we take into consideration. In that case, less than or equal to 5%. What is that? If the cash payments and cash receipts, here what I mean, total payments, not only the income, but also the other receipts, balance sheet items. If it is less than 5%, the situation is that, and if the profits declared are equal to or more than 8% or 6%, 8% is for the cash, 6% is for digital transaction, then also audit not required. This is a peculiar, because less than is there, therefore we need not go for an audit. No audit report needs to be submitted. In the case the D, again eligible SSC, eligible business. Now, the threshold limit for calculation of cash is less than or equal to 5%, and profit is less than 8% or 6%. In such case, audit is required. The section is 44AD, what we call a small audit, which we need not take for the purpose of counting our 60 audits and all. Now, E, eligible SSC, eligible business. The cash receipts and payments are more than 5%, and the profits are more than or equal to 8% or 6%. No audit, no section. 44AD not required, 44AB is not required. The problem is, here I have a practical problem. The portal is asking for tax audit report. Peculiarly, the income tax portal is asking me to submit a tax audit report. Okay, we will discuss later about that. Coming to 1 to 2 crores, the other condition is, if the cash payments are more than that, and the profits eligible, the profits determined are less than 8% or 6%, then audit is required. Section 44AD. 2 crores to 10 crores. In the Act, 2 crores to 5 crores was there, but we can take 10 crores due to the budget revision. This is not an eligible SSC, not an any other SSC. Here, one condition is the cash receipts are all less than 5%. Let us think that the cash receipts and cash payments are less than or equal to 5%. And profit is not an issue. 8% or 6% need not be taken into account. No audit. This is the, I think there is something flaw in the law when they enacted it. No audit is required, and audit report need not be submitted. For this, I will come to discussion. Coming to 2 to 10 crores, another alternative is, it is not applicable, and eligible SSC or eligible SSC, that is not required at all. More than 5%. This is cash receipts and cash payment are more than 5%, and profits are not applicable. This particular clause is not required to verify. Yes, audit is required. 44AB is the section. So the important point I would like to draw to your kind attention is 2 to 10 crores. 2 to 10 crores. There is one link is missing in my observation. That is section 44AD explanation B, eligible business means any business except the business of plying, hiring, or leasing goods carriages referred to in section 44E, whose total turnover or gross receipts in the previous year does not exceed 2 crores. This is the key point, 2 crores. Here, the 44AD restriction is there up to only 2 crores. They forgot to increase that limit above 2 crores. Thereby, the anomaly is, I find a very peculiar situation. The anomaly is for an SSE who is having a turnover above 2 crores, for an SSE who is having a turnover above 2 crores, but not showing the profits of 6 or 8% is not liable to tax audit. Whereas a person having just 1.9 crores shall be liable to tax audit. He does not show the profits of 6 or 8%. So this is the peculiar anomaly that was there. Maybe I think this loophole of cash receipts for counting, they may amend it. Since such a situation seems to be illogical, prejudicial to small traders, I think a notification resolving the issue may be expected by CBDT in due course. I think it will come, definitely come. This is most important, the critical area where to audit or not to audit. This is the slide I would like to spend some time on it, or any discussions on this is also most welcome. With this, I conclude the amendments relating to tax audit, and the critical issue regarding threshold limit also I could try to conclude. And with regard to 44AD, 44AE, which is a contrary to 44AB, rather not required to maintain books of accounts, they are required to maintain books of accounts. This I leave it to Sharma Garu. I think he is presenting his paper on day before next day, I think, not tomorrow, day after tomorrow. So I will not discuss anything on 44AB and 44AE as I promised to Sharma Garu. Let him bring out all the problems, he will discuss it. Other than that, which is related to tax audit and reporting requirements only, I am concentrating. Now, I myself is a doubt master and raise so many queries than what you are trying to raise a floor participation. Now I will discuss slowly. So far, whatever amendments were there, in that only I have one doubt. I am only raising a doubt. The doubt is a particular place, the crossed check and bearer check will be deemed to be a cash transaction. So will it be extended to the other payments also, like 40A3 or 269SS, 269ST? There also this will extend. So my answer to this is, when a particular provision is inserted and stating that it is deemed to be, that means it is not originally a cash transaction. It is deemed to be cash transaction. It is for that particular purpose. Therefore, in my view, this may not be extended to the other areas like 43B, 269ST and other things. This is my opinion. Now, another question is, I have a queries. In the queries section, I am entering into reporting part of it. Queries section, I am entering into. Sir, this slide is visible. Hello?
Yes, sir. Visible, sir.
Okay. So Mr. Rao is a partner in a firm in his capacity as Karta of his HUF. What should be given in clause 9A? So in this case, what I am trying to convey, the reporting requirements. The institute has given its opinion. In that particular case, we need to mention as a representative capacity needs to be mentioned. That means Mr. Ram as Karta of his HUF is to be mentioned. Now, the next question is, it is required to mention both sharing ratios if there are, in the case of a partnership firm, for example, the profit sharing ratio is 2:3:5 and the loss ratio is 4:3:3. Is it required to mention both the things when there is a profit in that particular year, when we are reporting that year there is a profit? So is it required for us to disclose even the loss sharing ratio in it? Again, the institute said, when there are two ratios, better you disclose for profit sharing ratio is like this, loss ratio is like this. Both need to be disclosed. This is what our institute has opined. Now coming to third issue, supposing a minimum profit share is guaranteed to one of the partners, the rest of the partners. That means when there is a share, when there is a loss or when there are no profits, then also that particular partner receives a share of profit. How to report that? Without mentioning the profit ratios of other person, it is better to disclose the fact as an observation. And I think in the that particular form 9 also, clause 9B also, it is better to mention the fact. I think it fits there. Technically, we need to check up. That is to be disclosed. Ultimately, it is to be disclosed. Now, the another question is, suppose if the partnership deed says retirement of a partner dissolves the firm, then is it required to be mentioned in clause B? Is the question. For that, 187(2)(a), it says that retirement or admission of a partner is considered to be a change in the constitution. What about dissolution? But there are case laws where they were saying a dissolution of a firm with continuation by another person, a dissolution of a firm without continuation of a firm. In such case, dissolution is a dissolution. Otherwise, even retirement, though it is written as dissolution in the partnership firm, in the partnership deed, but the Partnership Act overrides this, we need to disclose as the fact as a retirement and change in the ratio. Suppose there is a dissolution of a partnership and then restarted, or another two persons may continue the same firm. In such case, it is termed as only a change in ratios. This need not be dissolved. This is the opinion of the Partnership Act, and section 42 of the Partnership Act. It says it overrides them. When two partners are there, one partner died and existing partner takes another partner and continue the business. How to disclose? This is also like above one. Next, books of accounts. Books of accounts prescribed under 44AA. This is the most important issue. The keywords in the tax audit form, the books of accounts need to be verified. This is clause number books of accounts, nature of the profession. Yes, 11A. 11A. Books of accounts are prescribed under 44A. The keywords are prescribed, maintained, and examined. Prescribed, maintained, and examined. Here, 44AB, 44AA says, for a specified persons, they have mentioned cash book, ledger, and carbon copies of receipts and other things. For non-specified persons, I think they are silent on the issue. For non-specified persons, they are silent on the issue. In such case, and it is found, and in my experience also, I have committed mistakes. I said there are no books prescribed by the Act. That was what I have written in my earlier audit reports. After experience, I found, and after close reading of the section, they have defined what are books under section 212A, and one of the important issue is the AO has to books of accounts prescribed under 44AA2, books of accounts and other documents that enable the assessing officer to compute his total income in accordance with the provisions of the Act. So, this is wider term, in accordance with the provisions of the Act. Therefore, section 212A specifically mentioned about the books of accounts. What are the books of accounts? Generally, cash book, ledger, journals, and other issues. Therefore, in my opinion, I changed my, previously I used to write no prescribed books were mentioned. That's what I used to write, but now I changed it. It is a cash book and ledger, whether 44A mentions or not, because the other provision, insofar the books of accounts have been specified for non-specified persons, SSC carrying on business, we have taken the shelter of 212A, that is books of accounts. So according to me, therefore, reporting under this class, some people they used to write no prescribed books were mentioned, but we need to mention, that is better, my opinion. Can AO direct the SSC to maintain additional books of accounts? Because the technical words given is the books of accounts and other documents that enable the AO, to maintain, to compute his total income in accordance with the provisions of the Act. Therefore, can assessing officer direct an SSC to maintain additional books of accounts? The answer is no. The answer is no. Assessing officer cannot dictate terms to the SSC. How he is supposed to conduct his business, how he is supposed to maintain books of accounts, that is not the prerogative of the assessing officer. His job is to ascertain income. Otherwise, he can use a best judgment assessment. But he cannot insist the SSC to maintain any additional books of accounts. Now, what needs to be commented in Form 3CD, if that is the case? What needs to be, that is not the issue, that is not the correct frame of a question. What is meant by relevant documents? What is meant by relevant documents to be examined? In that, they said relevant documents. Here, our institute says even purchase invoices and sale bills, those things need to be prescribed. In the portal, there was a question, what are the documents that you have examined? So institute opined, we need not mention about the vouchers part of it. But documents, what do you mean by documents? According to, I think document means bank statements, other stock statements, any other stock records, other things need to be taken as, or any entry that is giving an evidence. After all, examination is what? Examination is verification of books of accounts with some documentary evidence. that is prima facie, a purchase invoice or a sale invoice or a voucher. So these things need to be taken into consideration. So that need not be mentioned. Somehow or other, institute has opined particular purchase invoice, sale invoice need not be mentioned. Other documents like bank statements and other things you can disclose. Now here, corollary to the name, what is an voucher? Whether it is an admissible voucher or inadmissible voucher, cash voucher, cash receipt. So the rules except says 6F says only 50 rupees is to be taken into consideration, and 50 up to 50 rupees and 500 rupees if the books of accounts speak about the nature of an expenditure, that need not be, a voucher is not required. Over and above 500 rupees, voucher is required. Suppose, what is proper voucher? How do we decide whether it is proper voucher or not? According to Stamp Act, whether the voucher requires a stamp, adhesive revenue stamp or not. Above, the concept in the Stamp Act is, up to 5,000 rupees cash receipt. Up to 5,000 rupees cash receipt, over and above 500, it requires a revenue stamp to be affixed. So if revenue stamp is not there, can we say the vouchers are not proper? Again, the answer is no. It is not our job. Because in one of the cases it is decided the voucher, if it is not properly revenue stamped or a revenue stamp is not fixed, they said it's a curable in nature. In case if there is any dispute that you have not paid the money, and if that raised to legal forum, that legal forum, they immediately ask whether a stamp is affixed to it or not. That is one kind of revenue to the government. So they are for the purpose of government revenue. If they pay with penalty, say 1 rupee stamp needs to be affixed, over and above 1 rupee stamp is not fixed, they can charge 2 rupees as a penalty. I think that can be a curable defect. Therefore, for an auditor, whether voucher is proper or not is not our prerogative. We can say the voucher is there, it is fine. If voucher is not there, what to comment in Form 3C? I think it is better to mention in the observation columns those things. But if it is material, then only we need to comment. Otherwise, we can keep quiet. This is my opinion. What is meant by that is over. Next, profit and loss includes assessable under presumptive basis. Our job is to say yes or no. Major deliberation, Sarmagaru will take care of it. Say, in this case, disclosure in the case of a contractor. Disclosure in the case of a contractor. Here, one problem is there, I am anticipating. Suppose our profit and loss account include 44AB profit. Say a person is doing carrying on a business, a trader is also having a lorry wherein he is taking a presumptive income. That presumptive income only is showing here. In that case, our job is to mention whether any income accessible under presumptive basis was credited to profit and loss account or not. In such case, how to verify whether this income is right or wrong? Say he must be having, say other way, a person is having 2 businesses. One business we are auditing, the other business presumptive income is taken. How do we say whether this profit is right or wrong? The right or wrong depends upon the turnover. Turnover, we are not looking into the other books because he is not required to maintain books of account. So there is a problem. In this case, our job is limited to only comment. Whether presumptive income disclosed is right or wrong is not the issue. Whether presumptive income is disclosed in the P&L account or not. That is the only point we need to say yes or no. This is my view. Next question. Method of accounting employed. In this, I try to mix so many problems. Market to market loss as per ICDS should be reported. The concept of prudence is not there in ICDS. For example, I would like to give through an example so that it is easy for us to understand. An SSC entered into 4-month forward contract on 31st January 2020. This contract entitles him to receive 100 shares at the rate of 500 per share, and the price of a share is 3,000 on 31/3/2020. Explain the treatment according to AS and ICDS is the question. Now, in this case, SSC entered into 4 months contract, and normally if he purchases 100 into 500, 50,000 would have been his cost. Whereas the prices on 31st March, you would have received on 1st April, but the prices on 31st March is 300 rupees. That means 100 into 300, it is 30,000. So 20,000 is a loss. This needs to be reported in the books of accounts based on accounting standards. Whereas this cannot be taken into consideration as per ICDS, because ICDS doesn't disclose, doesn't recognize the prudence concept unless otherwise stated in any other ICDS specifically. So this is one case I would like to bring to your notice. Next, methodology of valuation of closing stock, deviation if any. So, methodology of valuation of a closing stock. This is section 145A involves in it. In this, I wanted to give a gist of it, purely going into the subject, no more discussions on that. Para 13 to 15 of ICDS 2, it says specific identification method needs to be followed in case if it is possible. Or para 16, it says FIFO, first in, first out, is to be taken into consideration. This is a valuation technique, I'm telling you. And weighted average method, para 17, and 18.2 retail method. These are the 4 methods of valuation of a closing stock recognized by ICDS 2. In the case of a dissolution of a partnership firm, valuation of inventory at NRV. So these are the techniques. And there is a contradictory, because ICDS is meant only for computation of income, and books of accounts we need to follow as per accounting standards. Here, valuation method under section 145A of the Income Tax Act is also most important. There also, I'll come to the straight points. In case of a closing stock, lower of cost or NRV, it is to be taken into consideration. In the case of purchases, cost plus tax, duty, cess or fee paid or incurred to bring the goods to the place of its location. In the case of a listed securities, actual cost initially recognized. In the case of unlisted securities, in the case of a listed securities, lower the cost of our NRV, whichever is lower. This is the under 145A. ICDS says something, 145A says something. Now, we go to a specific problem in the case of a partnership firm. Yesterday, I think Ramakrishna Garu was telling about this particular case. So many issues involved in it. Now, leave it that as it may be. Now, for the purpose of tax audit reporting, I am discussing now. Next year, I don't know. According to Ramakrishna Garu, we will take that particular issues. The issue is on dissolution and continued by other partners. Valuation is cost or NRV, whichever is low. We have 2 classical cases decided by Supreme Court, Apex Court. One is Shakti Trading Company, CIT versus Shakti Trading Company, 250 ITR 871. There, they said on dissolution of a firm and discontinued business, the valuation is only NRV. The valuation is only NRV. In another classic case of Supreme Apex Court, ALA firm 1989, 189 ATR 285. There they said, in case of dissolution of a firm, if it is continued, dissolution of a firm, if it is not continued. If it is continued, valuation is cost or market price, whichever is lower. If it is dissolved and not continued, then the valuation is only NRV. These are the two classic cases we have. Now, these people through ICDS 2, they say both the situations of the stock should be valued at NRV. In both the situations, in a firm dissolved and continued, firm dissolved and not continued, in both the cases, according to ICDS, it should be valued at NRV. An interesting case, Delhi High Court in Chamber of Commerce of Tax and Consultants, Union of India, 87 taxmen 92, has struck down. It amounted to overcoming the judicial precedent by a notification. So, keeping the above three situations into consideration, 145A is amended with effect from 1718. So, resolving all the problems. Thus, in both the cases, the situation of the valuation of inventory should be NRV. This is with regarding to a valuation of closing stock in the case of a partnership firm. Now, I have another interesting case. That is materials supplied by contract. I think that is missing in my slide as a query, but anyhow, I will give it. Maybe some other place it was kept. In the case of a contractor, because some institutions, they wanted to use quality materials for their construction, they don't depend on the contractor. They supply materials to the contractor, which will be taken while billing it. So materials is supplied by contractee and the retention money are differing aspects with reference to ICDS and income tax. Material supplied by contractee, how do you, whether we take into consideration or not? For example, if we take a small example, if an SSE is having work done of 35 lakhs and build it, materials worth supplied is 18 lakhs, the gross bills are 53 lakhs. Amount retained is 10% of it, 5.3 lakhs. The net bills is 47 lakhs 70,000. How to calculate income under section 44AD? Is it 53 lakhs gross bills which are reported in 26 AS or 47 lakhs? What is the figure you want to take into consideration? This is a query. We need to answer keeping ICDS and also accounting standards into consideration. And there was a classic case by Supreme Court. The materials are supplied by the contractee. There is no element of profit in it. Thereby, we need not take that into consideration for the purpose of reckoning profit point of view. Therefore, under section 44AD, 35 lakhs needs to be taken as a contract value and 5.3 lakhs retention money we need to take, but 18 lakhs material given need not be taken into consideration. Thereby, the income to be arrived at 44 AD is only 1.77 lakhs, not otherwise. I think I am clear in this particular issue. So these are some critical issues I would like to. Coming to the other queries. Can a CA take up more than 60 tax audit assignments? Of course, initially I do not want to go against the institute, but the facts of the case is Council Guidelines CA 7/2/2008 dated 8th August 2008, the ICI prescribing the limit of tax audits enhanced from 45 to 60. It was originally 30 and then 45, now 60. And one chartered accountant has filed a case against the institute. K. Bhagavatishwaran versus Institute of Chartered Accountants of India, 237 ITR 208, Madras High Court. There, the particulars of SSC has conducted more than 60 audits. In that time, I think at 45, he has done more than the limit prescribed by our institute. The court has remarked, stating that the practicing is only a fundamental right under 19(1)(g) of the Constitution of India. Placing restrictions on member on cases of number of audits which can be accepted by a lawyer or a chartered accountant is unreasonable restriction under 19(6) of the Constitution, and also violative of Article 14, taking into account the historical growth and development of these professions and their traditional and customary practices. The right to carry a trade or a profession is fundamental right guaranteed under Article 19(1) of the Constitution of India. I think the Madras High Court categorically is given in favor of auditor, chartered accountant. I think it is in higher forums, some pending issues were there. I don't know further aspects of it. Now, I have a small twist in the case. Treatment of interest on partners' capital and interest and partners' interest on remuneration to partners. In the case of a firm, 44 AD and 44 AE are the two presumptive taxation sections. We know all that 44 AD, if the remuneration and partners' capital, interest on partners' capital, these two things were not allowed, deemed to have been given. So this is the case in the case of a 44 AD. What about 44 AE? The answer is yes, because I don't know, this is a misuse or anything else. They have missed. This provision was kept either wantedly or without the knowledge of the drafts people. In case of 44 AE, where a lorry transport business is there, interest on partners' capital and remuneration to partners both are allowed in the case of 44 AE. Beyond that, I will not discuss because Sarmagari will take in the day after tomorrow. Now, turnover in the case of a builders and developers, what is to be taken into consideration? Suppose if you take a land of your own land, yesterday Ramakrishna Garu discussed in length about it. If a land is taken into consideration, will it be a capital asset converted to stock in trade? And then how to calculate the profits? I think these are all already settled principles, except yesterday's deliberations by Ramakrishna Garu. I do not want to comment upon that. But it is a trading receipt for the purpose of audit. Sale of a land, conversion into plots and then sell, it is a trading receipt which can be taken as a turnover. Next, a practical issue is there. In case of a excess duty in the case of a finished goods with reference to class 12B, whether it is to be taken into consideration or not for the purpose of turnover. The answer is we need not take the excess duty into consideration for the purpose of valuation of closing stock, not for the purpose of turnover. This is because the movement of manufacture of goods is completed in all aspects and ready to dispatch, the liability of excess duty arises. The deduction for excess duty is allowed only when the excess duty on such goods is paid on the finished goods cleared or dispatched. The information relating to 43B is only to see that claim is not made on the basis of advance payments made without clearance and dispatch of the goods. Section 43B is a provision intended to disallow certain items of expenditure which are otherwise admissible on account of non-payment within the stipulated time. It cannot be used to allow as an item of expenditure which is not relating to the year merely on account of payment made. Hence, the excess duty paid in excess of the amount payable cannot be claimed as a deduction. This is the case where people, they used to pay for the purpose of excess payment and claim as an expenditure based on 43B, but they do not want to include in the closing stock. This was the planning hitherto people used to carry on, but they said, no, you cannot do that. Now, what is prepaid item, prior period items? I have taken a small example only for the purpose of illustration. An employee during the year, say 1920, has gone on a leave in the month of December 10th. No provision of salary has been made by the company. He has rejoined in 1st April 10 and he was paid a salary of April for the previous months also, October to March. So in this situation only, we have to call this as a prior period expenditure. Otherwise, it's not a outstanding expenses paid in the current year. That is a wrong concept. But anything not booked in the earlier year and which is recognized as expenditure this year, these things have to be taken as a prior period expenditure. Now, there is another interesting cases, whether unaccounted sales found during the search to be taken as a turnover. Unaccounted sales found during the search can be taken as a turnover. Accounts were not defined by the Act. Section 34 of the Evidence Act, accounts should be understood to be accounts maintained in the regular course of business. Accordingly, unaccounted sales are not to be included for the purposes of turnover, even in the case found by the department, and even then bringing it to the records, then it cannot be taken as a turnover. This is what has been given in the case of a Brijlal Goyal versus ACIT, 88 IDR 413, Delhi High Court decision. Now, I think I can conclude my given to the vast scope of the reports and controversial judicial interpretations. It is imperative that auditor is a skillful and precise on his opinions and gives a qualitative report. Thanks to your commitment and a strong work ethic, we shall all do effective reporting in the coming years. With this, I can conclude my speech and open to the floor for participation. Sir Murali Krishna.
Sir, Thank you very much, sir, for excellent deliberation and the
now-
detailed presentation of the topic. Members, for any queries, you can unmute yourself and you can ask directly to the speaker, or you can put it in the chat box also. Any questions from the members?
Sir, advance Mr.
Yeah,
Anand Rao,
one question. Yes, sir. Yes, sir.
advance will be
Advance
taken
will be
as
taken
turnover.
as turnover or not?
No. Advance will not be taken as turnover.
In case of
For
builder,
the issue is every time we are getting a problem because of 26 AS. Whether it is a revenue expenditure or anything to the other person. So what he is giving, he is supposed to deduct tax at source. Whenever he is deducting tax at source, it is being visible in 26 AS. IT people, they are saying, so if it is visible in 26 AS, why are you not offering it as an income? That was the main problem. According to me, judicial pronouncements are also there. Advance cannot be treated as income. Now coming to in the
but
case of a
once here,
contract,
sir, here the question is, once it is covered under GST.
yes, that also I'm coming to.
Yeah.
I'm also coming to that point. If it is covered under GST, GST platform and income tax platform are not the same. We cannot take there the meaning of supplies and services are different. Here, the sale for the purpose of, you see, in the accounting standard also, we need to recognize income only on percentage of completion method, or at times, if the gross receipts cannot exceed 25% of the total contract value, we need not recognize at all. We need not recognize at all. This is what our accounting standard and ICDS also says. Thereby, I am of the opinion, it may be anyone can differ with me and say so. This is my opinion. A person having turnover of 44 lakhs and reporting a loss of 15,000 requires tax audit. What, 4 lakhs or 40 lakhs, sir? Oh, okay. This is 4480. Yeah, 40,000. He wants to show 4480 and then declare loss less than 8%, and then he wants to show a loss of 15,000. What is the nature of business, sir? What is the nature of business? I do not know who is given that. The trade, which trading it is? Okay, no problem. Yes, he requires to carry on the electricals. He requires to carry on audit. Audit report is required because the threshold limit is less than 1 crore or 2 crores. 1 crore or 2 crores, and income admitted is less than 8% or 6%. Audit is required. Whether he wants to carry out this loss, it is better file in time, audit report submit, get the benefit. So next, what is? Any
other queries? Srinivas garu, Avasara Srinivas garu.
Sir, namaste, sir.
Namaste.
Sir.
V.K.V. good evening. Well present.
Sir.
Now there was a search operation during the previous year. That means, the financial year has not been ended. Sometime in the month of January, December, January, it took place.
Yes, sir.
So, but the certain turnover has not been recorded in the books of account, which was found by the investigating officials.
Okay.
Subsequently, in the books of account, the chartered accountant definitely has recorded it as income in the turnover.
Okay.
Would that be construed as turnover, or would that be construed as determined by the assessing officer? Because the financial year was not ended. It was proceeding. Actually, it was progressing.
Sir, the answer is like this. As per the case cited by me, it is not a turnover for the purposes of books of accounts. And it will be taxed under section 115 BB, sir, 60%. So maybe not this section, a separate, they treat that as a turnover, not as a turnover, but as an income. And it will be taxed under 115 BB, 60% plus 25% plus 10%, something like that. Therefore, I think this cannot be taken as a turnover.
In spite of the fact it was the.
Yes. Because they only found that. Otherwise, the concept is this person is not interested to disclose. Because of the survey, because of the search by the people only, this was disclosed. Otherwise, you would not have recorded.
Right, agreed. Now with that fact, what you have stated, now the chartered accountant has to record it in the turnover or not, because it
Sir,
is.
my view is, if he includes, see, our job is only reporting. See, after closing the books of accounts, that fellow will come to us. So whether he is included or not, that is the main issue. If he includes in the turnover, it is better we disclose as an observation or a qualification. You don't believe that as a turnover, you can give your opinion. So our job is only to give an opinion or observation or clarification or report denying it, whatever you feel so. According to me, this need not be shown as a turn. Even if he includes, better we disclose as an observation or let him give as a notes to the accounts. You see, ultimately we wanted to help the SSC community.
Exactly.
Let him disclose as an,
Why
disclose.
Yes,
At the same time, we cannot burn our hands because of wrong reporting. The 271J penalty is there on a chartered accountant.
Now,
Therefore, I feel it is better to disclose the fact as early as possible, or if you want to defend, the case law is there for you to defend yourself. But you can express your view. That is what the even institute is also recommending us. We need to document whatever we have done. Without documentation of our audit, I think there is no audit at all. This is what our institute has opined and said. We need to maintain, and we need to try to show the at least our comments are to be given. Whether you are qualifying or you are refusing. In the case of, I used to do, in the case of a liquor trade, their sales are there. Who will give bills, sir? Which is a major issue for the case of a liquor trade. The sales, how to verify the sales? We do not know. No bills will be given. The sales, which is a prima facie on which we are doing an audit, when that evidence is not available, I used to always give a negative report. I cannot express any opinion. But we need to fill all the things. With otherwise, our capacities and skills are there to compute the income. To that extent, we are okay. But as far as audit job is concerned, I think we have to qualify our report.
In this particular case, VKV, that in spite of the fact I have included the turnover into the books of account and also reported in the audit report wherever observation, while framing the assessment order, they've again added that undisclosed income. That is horrible.
So, this is horrible. That is why I said you don't include in the turnover. Better at least we could have shown some loss or something else.
But we have to put it somewhere in the footnote.
Footnote.
Observation or footnote, observation, whatever it may.
But the fact of their life in the case of a non-corporate sector, they come to us even without closing the books of accounts. Let us admit a fact. Every auditor, we are getting the books of accounts 80% completed, and the 20% job is to be done at our office only. Therefore, I am of the opinion, while finishing the job itself, we better not to include that. If he comes with that, that's okay. We have to definitely qualify. But if he doesn't come and we are helping him in even finalizing the accounts, in such case, better not to include. This is my opinion.
Thank you.
Person having next question. Just to Sir, any chat box?
Ramakrishna garu, anything you want to supplement or you have any query? You have unmuted. That's why I'm asking.
Sir, Sarma garu relay stick me hand over chestam.
We are listening. See, what happens over here is with regard to books of account. 212A and the one that which our form PCD is asking, whether any books of account are maintained or not. The word used over there is prescribed books of account, not.
Sir, I've given the three important words:
One second.
prescribed, maintained, and examined.
Let us conclude first.
Okay.
See, we have to draw the difference between books of account and prescribed books of account. So whatever we were giving earlier, that no books of account has been prescribed for the SSC's line of business, that still stands good, because for businesses, no books of account have been prescribed. The first question in 13, for serial number 13, clause A, what is asking whether any books of account has been prescribed? No, the answer will still remain same. Because there is a difference, as I told you, a difference between the books of account and prescribed books of account. Books of account, so long as 212A is concerned, it is applicable to all. It is applicable to all, irrespective of the fact whether he is business or he is a profession. Prescribed books of accounts are different from books of accounts. So we have to draw a demarcation over there. That's one supplement.
Sir, previously we have a case where in the case of a kerosene dealer was there.
Yeah.
He used to maintain purchases and sales only.
Correct.
No cash book at all.
Right.
Still, at the time when I entered into the office as an articled clerk, I was surprised to see without cash book how people are accepting it. Then my boss told me, this is the wording: enable the assessing officer to compute his income. The
Correct.
books of accounts that enable the assessing officer to compute the books of accounts are sufficient.
That's it.
They never said cash book or ledger. Then they have taken that ground. Therefore, that was the imbibed on me. I used to follow. No prescription was made. However, after going through the institute opinion, and myself, today everybody is getting a tally or some other data. Even in the books of accounts, even electronic form is also mentioned.
No,
even in the
that's what I'm
Companies
saying.
Act, it is
Make a
mentioned.
demarcation between 212A and prescribed books. Huh? See, rule 6F is there. 6F
Rule
is
6F is different for specified persons, sir.
So that's what I'm saying. Let us not mix books of account with prescribed books of account. My serial number 13 is saying prescribed books of account. Let's go to the word first clause. Just take it up.
Okay.
That's the only
Yes.
difference. Just a supplement, huh? That's just a supplement.
Okay. What is the problem if I say so?
No.
We think otherwise.
No. I'm. Why should I do things which I have not asked for?
Okay.
And burn my hands. Why should I say that? No books of account has been prescribed. Leave it like that for the SSC's line of business.
This is line of business. That was the common answer we used to give.
That is
Now
what
I
we do.
modified. So you want me to go back?
Yes. That is what I have designed also. Earlier also I have designed the same words. We'll continue with those words. Next, coming to dissolution. See, we'll draw a demarcation between dissolution and winding up.
Yes.
So, in the case
Yesterday you have an elaborated discussion, sir, on that. Now let us limit our argument for the purpose of how to report is only important issue.
Yeah.
See, after all, a businessman does everything, closes the books of accounts and come to us. Our job is to report. Even if we write the books of accounts, that's a different story.
Where we were talking about search and survey, that survey we got some turnover, na?
Yes.
So if he is recording in the books of accounts, irrespective of the fact whether he is showing in his GST returns or not, let's not be bothered about that. The moment he is saying in his books of accounts, let us demarcate between income and receipts, huh? So if he is showing the gross receipts in his books of accounts, irrespective of the fact whether he has disclosed in his sales tax return or whatever it is a turnover for the books. So I have to consider that. Whether it is
different opinion.
Recording, very happy. The word used by Srinivas is year not ended, brought into the books of accounts. So I will count it as a turnover. If the assessing officer has again added back, we can bring this to his notice. Say, look, I have
Sir.
already included, you better delete it.
Sir, we will be in trouble, sir. I will tell you the reasons. I will tell you the reasons. See, the moment the assessing officer has taken the data and the books of accounts were seized by them, normally in the search, they seize the books of accounts.
True.
And up to the date, if they have not written, the prior to that date, some bills were found. That is deemed to be not recorded in the books of accounts. Say, if they come in the month of October and they found the April, May, June bills were not entered, so that indicates a risky proposition we are taking. Why do we
No,
take?
no, no. We'll make a note. What you said is true.
That's what I'm saying.
We have to make a note.
We have to report.
There
we have
was
to
a
report
survey, during the survey, the SSC is offered this much, which has been reflected in the book, subject to that.
Yes, our job is to either you give a clean
Full fact, we have full
note,
fact.
facts should be mentioned.
Okay.
Our job is to
Note
mention
that
the
we are
facts
in-
and let the assessing officer take any of you. See, the very interesting issue is here we are supposed to examine the books of accounts and express our review. We are not bothered about the computation. Computation is the job of an SSC.
SSC's job.
Even though we do it, but it is the responsibility of that. We don't sign on that.
No, no, we don't do
We-
that. We are not.
We don't. Therefore, computation and ICDS held by those people only. That is why a clause has been inserted in this Form 3CD. They have inserted this ICDS because every time we say books of accounts not required according to accounting standards, it is prescribed and they are okay. Then who will bring it to the light? To the assessing officer. Therefore, they inserted that particular ICDS class. We need to find the difference. For the purpose of computation only, we are helping him. We are helping for the computation, but we are not signing on that.
Even coming to ICDS also, he is asking over there a question only in the event of deviation from the ICDS.
Yes, there is a deviation.
Only
You see,
if there is a
according
deviation,
in
we
the
will-
example we have taken, as per the books of accounts, the loss we have to anticipate based on accounting standard, whereas ICDS doesn't recognize the prudence. That 20,000 rupees loss, which we have given as an example, that needs to be reported. So, whether he takes into computation or not, our job is to find out the differences and put it in the report. Beyond that, nothing else. Sir,
Yeah,
any
good,
other,
that was good.
sir, any other queries we'll see. Question is whether the advance turnover. Sir, time is given to me up to 8. I thought
Sir.
many queries will come. So I limited my presentation with reference to only amendments and the latest changes.
Yeah, Father.
Because this is, I can say, 37-year-old provision. All the auditors here have equally traveled with me all the 37 years. Therefore, by this time, everybody is crystallized about their opinions. So initially, I thought one section case is given to you, Ramakrishna Garu, and many sections were given to me. But his job has become very difficult. My job has become very easy. So,
So any other members, any
coming to
queries, please?
Sir, Visweswara garu,
Sir,
though the section 44 AA2
yes, sir.
not defined books of accounts,
Yes,
we are taking a clue from 44 AA1 rule 6F1 or
That is for
whatever
specified only,
they
sir.
prescribed.
That is
Mostly.
for specified persons.
Yeah, that's true. Specified persons, okay. But as
Okay.
far as such books of accounts to enable the assessing officer to compute, these are the words. And we are certifying that the SSC proper books of accounts maintained. Is it not? The wording, while we are certifying 3CB, are we not mentioning that the proper books of accounts maintained by the SSC?
Yeah, we are.
Sir, here you are missing one more important issue, one more crux of the issue.
Sir,
The AO to compute his income in accordance with the provisions of the Act. You are forgetting about the other provisions.
Yeah, provisions of the act is fine. What I am
So
saying,
other provisions, I feel, even 212A is also another provision.
okay,
So
so,
there they mentioned about the books. Sir, this is the main issue.
Yeah.
Every time we are oscillating between maintenance of books of accounts, non-maintenance of books of accounts. Maybe for a moment I can say between you and me, you are dealing with non-books of accounts, dealing with sections where books of accounts are not required. I am dealing with the provision where books of accounts are required. So SSC is oscillating, or rather auditor's mind is oscillating in between these two things. See, the interesting issues are last year 44 AD, no books of accounts maintained,
right.
and this year audit is there. How to, we need to qualify the opening balances are not taken on audited figures. So therefore,
Whatever
we need
he
to-
supplied, the SSC supplied taken into account.
we
Last year
need
I
to
have not
comment whether we
audited.
verified it or not.
No,
Yeah,
we-
that we are mentioning in notes to the accounts to the
Ah.
extent last year, I have
Sir.
not audited the accounts of the SSC. Whatever the opening balances, sir. In fact, even presumptive taxation, we are giving the cash balance, debtors, creditors, inventory. Unless you maintain after the GST regime, unless
Yes,
you
sir.
maintain those things, you cannot give those.
Sir,
Normally, we are all recommending to maintain books of accounts.
Sir, we need not recommend, sir. It is a mandatory in the GST. It is a mandatory in the companies,
Yeah,
of
yeah.
course. Companies will leave it.
That's true. As
For
far as
any other
income
purpose,
tax,
for the benefit of SSC also, maintenance of books of accounts is made. In one of my tribunal cases, a contractor has disclosed a turnover of 43 lakhs, and there was some addition. So I was arguing the case before the tribunal, stating that, sir, this cash addition is also made, which I don't like. This is only a contract receipt. Then, interestingly, turning the case to a different issues, he said, how do you claim your bills? You first let me know. You should have a record at least. Though Income Tax Act permitted not to maintain books of accounts, that's a different story. What is the basis for you to raise your bill? You should have some basis.
That is
yes,
why I had been telling, always keep books of
So
accounts.
we
Yes,
need
sir.
to maintain books of accounts, not for the purpose of income tax, for the purpose of GST we need to maintain, for the purpose of so many other issues we need to maintain. It is better to maintain and take the advantage. Sir, now we have three issues, sir. One is maintenance of books of accounts, one is audit obligation, the other one is non-audit obligation. So you may offer your income, but that doesn't mean you don't maintain books of accounts. My suggestion to all the SSC community, we have to insist those people to maintain books of accounts. Let it be, how do we know the turnover, sir, otherwise?
yeah.
So at least to know the turnover, we need to see the books of accounts. Today, of course, GST, all the information is given in Form 26AS. So many other issues are there. Thereby, I suggest to maintain books of accounts and then find whether audit obligation is there or not. To that extent, we can guide them. Beyond that, we don't involve in it. So this is my opinion.
Presumptive tax, what is the necessity of maintaining the books of accounts, sir? So the
No,
purpose
if
is deviated now, totally.
One second. Vastamurthy garu.
Sir, I am not audible. Sir, కొంచెం clear గా చెప్పండి సార్.
ఒక్క నిమిషం నేను చెప్తాను
Sir,
బాగారు.
it is a presumptive tax. What is the main purpose of presumptive tax? Because he has not maintained the books of accounts, only presumptive tax means only based on the, so assessment only he is giving.
No. See, one
So sir, that is not the issue, sir. The issue is, I will tell you, presumptive taxation is an option given to the SSC to compute his income.
Okay.
That never said
Books of account maintenance is not required, no, sir.
books of accounts maintained is also not required.
No. 1 second.
That is an option. When it is an option, that is also an option.
I'll come 1 second. Sorry, sorry to interfere.
Sir,
If
sir.
you look into 4480, the very first section says that notwithstanding anything contained in 28 to 43C, It is
Yes.
not using 44A or AA. So those provisions which are in between those two shall not apply. So 44AA is after 43C. So what I opine is, preferably, you have to maintain books of account. This section is never saying don't maintain books of account. This section is only saying, as you rightly said right now, it is giving an option. Your turnover is this, go for so and so. Don't maintain books of account, even that section is not saying. The very first section, subsection 1 of 44 AD, notwithstanding anything to the contrary contained in up to 43C. So my opinion, Vasudeva Murthy garu, better books, maintain books of account to avoid any future problems.
Sir, any queries on the threshold limit of 1 to 2 crores
No,
and 2 to 5 crores and 10 crores?
that should be okay.
So clarity is there, sir?
Yeah.
So what I'm trying to convey, is it correct? There is a lacuna found.
Sure.
For that matter, even 44 ADA, on one way, they are telling that 44 AA1 mandatorily you have to maintain.
Exactly.
Yes, sir.
But 44 ADA, there is no such provision that you need not maintain. It's not there because I read that because in the income tax portal, in fact, they have mentioned that there is no need to maintain books of account. They mentioned in that. And Nirmala Sitharaman, when she is giving budget speech, she mentioned those things that bringing into on par with 44 AD for professionals also, I am bringing 44 ADA for non-maintenance books. Because of that only taking that, there is no specific exclusion or exemption provided in any of the sections that once 44 ADA is opted by any professional specified or notified, and they need not maintain books of accounts. There is no such provision anywhere you can find.
In such a case, there is no use of presumptive tax, no? When customer
Sir, presumptive tax usage is for the benefit of SSC, sir.
automatically you can compute the income and as per the books of account.
Yes,
They
better.
raise the question of
More than 8%, show more than
presumptive
8%.
tax.
And go ahead. Only thing is that even if you maintain the books of account and offer more than 8%, in scrutiny, you can still play safe that, look, I have already offered more than 8%, why do you want to scrutinize? He need not look into the aspect of income and expenditure account, but he definitely has the right to look into the assets and liabilities. Even otherwise also, even if it does not maintain books of account, he can still ask you the details of assets and liabilities. Not included in the books of accounts also, even if you maintain. Take it up. That provision is
Sir,
also there.
I feel when the books of accounts are not maintained or prescribed of the account, then AO can jump into 145(3), can reject and estimate. Sir, why he should reject, sir? We are only rejecting and we are estimating income. That is a better chance. Why do you go for 144? Better go for 140 this way. That is a benefit given, no scrutiny and all.
Scrutiny unna, income and expenditure touch cheyaru, but it does not preclude the AO to look into the assets and liabilities.
So అలాంటప్పుడు books లేకుండా చేసుకోవడం మంచిది.
అప్పుడు కూడా పవర్ ఉంది వాళ్ళు.
They have a power.
When is the books of accounts prescribed for 44 Sir, 44 AA1, specified persons and notified persons. When the books of accounts are prescribed, you said that the assessing officer cannot call for any books other than the prescribed. Fine, right?
Yes.
But in the case of business, 44 AA2,
You cannot call anything.
they can ask, it is wide open because there are no prescribed books of accounts.
Okay.
Can he call any
Sir,
book
according to
what he
me,
has-
but that is a court decision, sir. What I have told you is a court decision.
No, no, it's not the professional I am asking. If it is
No, no,
general
no.
business.
Court
what about
decision.
AA2?
It is a high court decision I have given you. Assessing officer has no right to step into the shoes of an SSC and ask him to do in a particular fashion a business. Not to, if he wants, he has a power, sir, to compute the income 144. Let him do it. Why he should say you should maintain this book and that book? You see, suppose if it is cost record to be maintained, if he cannot maintain, some other department is there to penalize him. If excise records are there, if he is not maintaining, some other department is there to penalize him. It is not the income tax department.
Yeah. I just gone through the case law. It is Allahabad High Court.
Yes.
CAT versus Rajinikanth Dev. In that, it is a professional, sir. It's not a business fellow. What they said that when a particular books of accounts
No, sir, my case
prescribed
law
by
is with
the
regard to
Act.
businessman only. My case law is with regard to businessman only.
particular nature of the profession, prescribed maintenance of certain books of account, it is not open to the AO to desire some other books of account to be maintained over and above the books of account required by Rule 6F. Any
The
view
rule
to the
6F is against
contrary-
specified person.
Yeah, that's what I mean. Business
Yeah,
persons,
Okay.
Business person, it's open. It even
Sir.
says not only books of account, other documents. Read the word after that.
Sir, again, I have my own doubts. Again, I will put before you because people are not asking me
281
questions.
ITR 6.
You're right, sir.
So,
One more question I wanted to ask. In section 48 2B,
48 2B.
payments made to relatives.
Okay.
So in this case, some people are reporting where a transaction between two sister concerns,
Okay.
purchases and sales are there. They are reporting both. Is it right?
Okay.
Question is
As
not-
long as compared to the market rate and all is equal and there is no change, that can be done. There is no harm.
Sir,
As
there is
a business prudence,
sir, suppose if I sell a product to a sister concern where the market price is 100 rupees, I sell it for 80 rupees. Will it be reported in this place 48 to be?
1 minute. So, again, sorry to interfere. My section form 3CD.
Sir, I have my opinion. I will tell you.
Transactions between relative. It is not asking whether it is excessive or unreasonable. The point over there is what are the transactions that have taken place in between persons mentioned under 48 2B. They are
Sir.
not asking excessive or unreasonable. We have to
Fine,
just
fine.
report it. It is for
Sir,
the assessing officer to
I will
decide
come to the
excessive or
important
unreasonable.
issue in it. So suppose if I sell 100 rupees worth goods, 80 rupees, is it required to be reported in this case or not? Is my
No.
question.
You sell for 2 rupees. I'm not bothered. What is only saying is
If it is a relative, we need to disclose.
he is asking us to disclose the transactions, not whether it is reasonable or unreasonable. No.
Sir, the courts said, I will tell you, the courts said it is a payment, not the receipt.
No, any payment.
If it is a, see, when I am receiving there, it is not payment. When I sell, I am receiving money. Therefore, this can be excluded. There was an addition made by assessing officer on account of this, which was deleted, stating this particular reason. See, 48 2B is relating to the payments made.
We're talking about payments only. I'm not talking about receipts. I'm talking only about payments.
Payments, that's all. This I would like to bring it to the notice of all the brothers. So this is one interesting case. Now, because the time given to me is 8 o'clock, I would like to continue with my other queries. I'm always a doubt master. I wanted to clarify my doubts. So the issue is, SSC is having 4 businesses, out of which 2 businesses are presumptive income. 2 businesses are audited by 2 auditors. How to upload this reports?
you need to have a consolidated tax audit and See, written is one. For all business, it's a SSC based. It's not on the basis of business.
Correct.
Yes,
Fine.
sir.
Correct.
Ah.
Correct.
So on SSC base means both the tax audits done by two different chartered accountants should be consolidated
Hmm.
and a report should be compiled. And based on that findings, anyway, we have auditing standards basing on third party or relying on SA 600.
SA 600, yeah.
Hmm.
Based on that, we can report.
This was what
What
we
did he
are
not
supposed to
rightfully
do,
done?
and we are doing it. Now, another interesting question, because nobody is raising questions, I am only raising questions. Sir, if any persons wanted to raise questions, please. I am giving the chance to them.
I'm muting now. I'm going. I have some work.
Sir,
With your
Any
permission.
questions? Any queries from members? Unmute yourself and you can ask.
sir, I have another important query. If somebody is not raising, I
Please,
will
sir,
tell you.
proceed. Yeah, please proceed.
Section 14A is there. Section 14A disallowance is there. So in the case of a partnership firm, a person is receiving a remuneration and a share of profit, and is disclosing in his income. In such case, whether 14A is to be invoked or not, because his capital contribution to the firm is getting two benefits. One is exempted, the other is taxable. So can we invoke 14A?
So it is dealing with the recipient. 14A deals with the person who is receiving the income.
Yes.
So if he is showing,
No, I am saying a person with a turnover of taxable audit, and is also having a share in the partnership firm, and is getting that income. In such case,
share income
14
exempted.
we need to invoke or not is my question, because both are from the same person. One is exempted income, the other is taxable income.
If we
Therefore,
are able
14A
to
invocation is
identify,
must.
if we are able to identify the difference, then that part of the expenditure or interest, whatever is, if it is identifiable to exempted income, please disclose. If not, make a disclaimer. In the absence of any details, we are unable to demarcate between the income that is.
So these are the issues we
No.
need to address in our audit reports.
Yes, yes, definitely, yes, definitely. We make a disclaimer. If we are unable to identify.
By disclaimer, you can express your opinions and all, or better, ask him to give some details in the, as you are a master in it. Every time, let them commit as a footnotes to the financial statements.
Yeah.
So let him commit, and then we take the
Take
other
it
way.
in writing from him. Take it in writing. Keep it as an evidence.
Yeah. So I am with reference to.
So I'm closing now.
Yeah. Thank you.
Bye, good
Very
night.
good.
Thank you
Everybody
so
is
much.
there. I wanted to take leave also.
Thank
If
you.
say
Thank you
no
so much.
queries are there,
I'm muting.
sir. Thank you very much for your contribution.
Bye and good night.
Thank you. So finally,
Sir,
if my time is there, half an hour time in advance, we are closing or not, I do not know.
no issues, sir. As you wish, as you are comfortable.
I am comfortable. I can keep on asking myself and answering the questions. If somebody else raises a question, I'll be happy.
So members, any questions from your side?
New members are being seen, it seems. Some people, Gautam Parekh, I think is a sufficiently seasoned person. Sridevi, Villa, some other people are there. New faces are there. I don't know. I've never seen them. If any new faces are there, yes, sir. You can ask questions, sir.
You can see the face now, sir.
No, I've been reading the names, who are the new faces and all. Somebody is there, I'm ready to answer. If I can. Or And one more request, if people are interested to supplement, I welcome them also.
गौतम आपने फोन किए थे?
Or anybody wants to supplement
Sir,
also, they can do.
I have small note. Actually,
By mistake.
as you previously explained that assessment officer has no rights to ask for the SSC to maintain the books of accounts. Sir.
Yes, sir.
But in one case, what is his argument is, according to section 44 AD, EA and AD and all, as in the presumptive taxation, you are arriving gross receipt. On that, you are some percentage, 8% or more than that, you are presumed as a income. On that, you are paying the tax. But what his contention is, how you are arriving the gross receipt without maintaining books of accounts. At least you are supposed to maintain cash book or a bank book. So in that manner, you are maintaining the books of accounts. That is what his argument.
Sir, we need to maintain books of accounts, and for that matter, bank account is not a book at all to be considered. Bank account is a statement supplied like a third party statement. Like in the case of a confirmation of a third party, bank statement is not a books of account. That is concluded.
Cash book, receipts book, what that is
Cash
what
book.
At least cash book you will maintain, receipts book you will
Sir,
maintain.
today I find there are so many interesting issues are coming up. When you take, say for example, in the case of a professional or any other business people, what they are reporting is including GST they are showing. In the case of a contractors, including GST, they are showing in 26 AS. Whereas we are excluding GST and then estimating income. So there is a turnover difference. Every time a problem is coming to us, they said, sir, why there is a difference in the turnover? Then we are giving a reply stating we are reconciling the turnover. Sir, this turnover is inclusive of GST. What we offered in the presumptive taxation is without GST. So this, it is better to, in tax in presumptive, no need for auditor to comment. If it is less than that only we are commenting. If it is come to the auditor notice, it is better to reconcile the turnover differences, if any, which are seen by the assessing officer in Form 26 AS. Otherwise, no problem. So turnover part of it, there were, and one interesting case regard to so many things were there. In 44 AE, there is one technical issue is coming. 44 AE is with reference to the number of vehicles. Okay. Whereas his 26 AS is showing turnover of 3 crores. Whereas we are estimating income based on number of lorries. There is a tussle. The income tax portal is not accepting our return, stating your turnover is more than 1 crore. You are not uploading 44 AB tax audit report. Therefore, it is rejecting it every time. I thought it's a small case. I have given it to my staff, and finally it has gone to such a level. I wrote a letter even to the CBDT. Sir, there is a glitch in the computer, the technical problem. Kindly accept my return. I am right according to me. Turnover has nothing to do in the case of 44 AE. It should be ignored. It is with reference to the number of vehicles we are holding. So when I wrote a letter, it has become so difficult for me, and I have taken the help of concerned commissioner here in Visakhapatnam. We wrote a letter and he has given his endorsements, taking his technical staff to comment on that. Based on that, we have sent it to CBDT. That means so many officers, they have accepted my contention. But CBDT, I got a call from CBDT. Sir, you are the person asking so many queries. So I got 3 times a telephone call from CBDT. They were asking about why are you dealing like this? I said, sir, this is the provision. So they said, sir, you show less than 1 crore and file it, because you have taken already all the precautions from all the officers. They will not trouble you. Plus, don't ask us to do anything else. That is an oral reply they have given. The reasons we do not know. Suppose if they open that flood box, I think there will be thousands of returns will come to them. That is what they were thinking. But that lacuna was not rectified even on date, even as on date. Have you ever tried turnover exceeding 1 crore or 2 crores and then less than this? This is a problem.
Yes, sir. This problem is raised for one of my client.
Okay.
Same, because we are going based on the number of vehicles. But as per the turnover, it is crossing 1 crore. It is asking for tax audit report, so it is not accepting the return.
Then what you have done? That is important.
Same, sir. No, actually, I also discussed with the local tax authorities.
He sold the vehicles.
Same. They told the same solutions or nothing. You filed with the lower turnover. We don't have any other solution.
Because I think my case must have been a precedent for them. Because I insisted when the commissioner to write a comments on that. So they returned that. Okay. Now, sir, in the case of 48(2)(b), one more interesting comment is, in the opinion of the assessing officer, not in the opinion of the auditor. Our job is to just report the fact. There is a transaction in between relatives, and that too, if it is a payment, we need to mention. But the section says, in the opinion of the assessing officer, if he feels, he can disallow it. Not the auditor or the assessing. Therefore, only payment ways only we need to better disclose. Otherwise, keep quiet about it. But I don't know whether I confused you more or clarified you more. So with this, I think I can conclude there are no further queries from the members. Sir Murali Krishna, you can decide, sir. I'm interested to answer, but
yeah, any queries from members? Speaker is very much interested and inviting questions, in fact, from the members to interact.
No
So
problem,
if
sir.
questions are there, we'll wait, or we'll take up the question and answer session, or else we'll conclude the session.
Sir, I am well ahead of half an hour. We are closing it.
Yeah. That's okay, sir. But you have covered extensively. You have covered all the amendments, all the changes, recent changes, and all.
This is with
Detail.
regard to tax audit only, because there are so many
Yes, sir.
other amendments made to other sections, even in
Yeah,
the case of
again,
assessment.
if tax audit report 3CD and all clause by clause, if we go, it will take so much time. That is
not required, sir.
Yeah.
I think this is 37-year-old provision. I don't think every time we tell all the same stories.
Yes, sir.
But only additionals only. I have concentrated only on those areas, and
Yes,
which
sir.
are affecting the current year tax audit report.
Please send your PPT to our mail, sir, branch mail ID. So
Sir,
that
while going through the PPT, I found 5-6 mistakes, sir. Maybe small mistakes. Sir.
Yeah.
So let me correct and then I will send it to you, sir.
Okay, sir, as you wish. So keeping there's no questions from the members the view, so we are proceeding to.
Sir, I wanted to conclude with a
Sir.
saying. As yesterday, the speaker he said we have to close with a saying. That I tried to do it. We will see that slide. Last one. Today, it takes more brains and effort to make out income tax form than it does to make the income. Similarly, it is very difficult for us to earn income. Easy to earn income than what we need to submit the details.
So nice, sir. So nice. Now I request Secretary of our branch, CA Prashant Kumar, to propose vote of thanks.
Respected Chairman C.S. Murali Krishna Garu, Land Speaker and Senior Member of the Profession, CA V.Kasi Visweswara Garu, Past Chairman and other dignitaries, good evening to all. I'm privileged to propose vote of thanks for the fourth day session on my own behalf and behalf of the Visakhapatnam members. Sir, I convey my sincere thanks for accepting our invitation and sharing your knowledge for the benefit of Visakhapatnam members. Sir, your experienced deliberations given us a insight enlightenment about the latest amendments and its impact for the assessment year 2021 to 22. Our special thanks to you, sir, for your query and solution part of the session, as it clarify more doubts of our members, sir. And special thanks for your patience clarifying doubts of all our members, sir. Thank you very much, sir, for your wonderful deliberations. Dear members, tomorrow we have a session on faceless assessment, the new era in tax administration by CA KSS Sharmagaru from Ankavelli. I request the members, please join, get benefit out of it. Thank you one and all.
Sir, thank you very much, Murali Krishna Garu and co. I need not name each and every person.
Thank you, sir.
Because of
Thank you for your
only-
valuable
because of
time
you
and
only,
effort.
I have reviewed all the provisions. Otherwise, I could not have done my audit this year also. I would have missed it. And I found my Guru Garu, P.V. Kali Prasad Garu is there. His name is
Yes,
there.
sir. Yes.
My namaskaram to him also. Thank you very much, sir.
Thank
With
you,
this,
sir. Thanks a lot.
Thank you very much.
Thank you.
Thank you.
Thank you, Visweswara.
Thank you, sir.